The chatter to buy Indian equities has gotten louder over the last few days. Indian equities have received 3 positive updates from brokerages who are advising clients to accumulate as valuations have now reached a reasonable level post the recent correction that we've seen. Remember, the Nifty 50 index has corrected over 2,000 points from its all-time high of 18,888 on the 1st of December to a recent swing low of 16,828 on the 20th of March. Since then, brokerages, particularly foreign brokerage houses, have turned optimistic on the market, citing reasonable valuations. So let's start with Sunil Kaul, the India strategist of Goldman Sachs, who recommends buying India on dips, advising investors to buy quality as valuations are back to reasonable levels. The MSCI India Index is now trading at 19 times forward price to earnings compared to Goldman Sachs' fair value estimate of 18.5 times. Goldman Sachs has also retained their 12-month Nifty target of 20,000 and remains overweight on sectors like banking and cement. Let's move on to Venugopal Garre of Bernstein, who is expecting Indian equities to see a quick rebound in the near term after 6 months of an underperformance to other emerging markets. He further said that the call for a rebound is premised on a confluence of tactical factors, including valuations and a bunch of macro factors as well. Among sectors, he cites financials, real estate and cement to be the biggest beneficiaries of this potential rebound. Now, if you remember, a few days ago on the 31st of March, brokerage firm Morgan Stanley upgraded India to an equal weight from the earlier rating of underweight due to a narrowing valuation premium and a resilient economy. The brokerage said that it is bullish on India's structural growth story and that growth will be driven by a confluence of factors: digital infrastructure, empowered lending boom, demographics, domestic demand, as well as an improving foreign direct investment. Morgan Stanley intends to focus on the financials and the consumer discretionary sectors in India, and it has upgraded the consumer discretionary space to an overweight from an underweight earlier. It has also turned constructive on healthcare, upgrading the sector to an equal weight from an underweight earlier.